And sweet, here we go. Cool. How's it going, guys? Good afternoon. February 24th. Here we are, and I have a bang in my hand. Sweet. So, if you guys remember last week, let's go over here really quick to YouTube. Let me go ahead and show you. We can go down here and press on it nowadays, since you have like this saved. With like a saved portion where you watch everything, you know what I mean? All right. Now I got to sign in on YouTube to my account. Great. 1 second. Switch account. Ooh. Didn't have my account, did it? That's interesting. Go back to YouTube. Isn't that kind of weird? Like you save so many different things to your laptop, and then it'll like guide you to a different part of your stuff that you don't want to go to, you're just like, okay, this isn't really a part of the plan. All right, so we're going in to really just take a look at what we did last Sunday. Going to the YouTube channel. For those of you that don't know where it's at, if you guys haven't been to it quite yet, at the channel, let me see here. Where were we? For February 17th. In this one, I can't remember. I don't know if I put anything on the background. And we did. Cool. We discussed a little bit more on order blocks. I know that everybody was really confused about how the whole order block thing was lining up for setups. So I'm going to go up a little bit more in detail this Sunday on how these order blocks set up for our trades, a little bit longer term trades actually. So we were looking at Euro NZD throughout the week. I was looking at it anyways. I don't know if anybody else was. But I took a nice buy on the bias that this right here was the order block, the buy order block from the bottom of this channel on the 1 hour. Looking a little bit deeper, say, on the daily, it looked like we had entered a liquidity zone. So I was kind of already taken back by just the whole just the whole framework of like, okay, well, supply and demand meets meets criteria. So as soon as we meet criteria for supply and demand, I'm just like, let's go here on the the lower time frame, take a look at what else is going on the lower time frame, see if we can find ourselves an entry on this buy. Because once we meet a supply and demand zone and we meet some specific criteria, kind of like what we did down here, around 1.6430-ish, 24-ish, then we go in and we take a look at, okay, are there any signs of like momentum to the upside? And if I do have any momentum to the upside, what are we going to be looking for? Well, we want to see if we can find ourselves an entry kind of like this right here, spot it from the very bottom up to, let's say, the top where the rejection zone was, right in the 0.5%. Okay, so let's go down here. Let's try this. This would be probably a little bit more beneficial. So we come down here to the sweet spot at 0.75, 0.70. It's 70.5% retracement. And in that 70.5 retracement, that's where we're looking for the entry to the buy side. So for our buy, this is where our original entry was, to a 267 pip, very small drawdown extension. So we had a nice trade potential of 267 pips during the week on our favorite pair, which would be Euro NZD is one of my favorites because there's so many pips that can be drawn out on a daily basis. You know what I mean? So what are we looking for now? Where are we going to continue with Euro NZD? Well, there are two different scenarios that can happen now. After this week's play out, you know what? We were right above the 200 EMA, which really doesn't matter if we're above it or below it. all it's really going to simply do is just tell us the sentiment of the market. So as we're walking into 4 o'clock, we're walking into the new NFP is going to be this week on Friday, so keep that in mind. NFP definitely affects Euro and NZD pairs. Okay, so what I'm looking at right now, my outlook for Euro NZD, as I'm inching a little bit more further towards smashing this high right up here, even though it looked like a stop hunt, to me was still a forced candle to the upside right after this bank. This is right on let's see, where was February 20th? February 20th was Wednesday, so on Thursday, what happened? The 21st, we had the midweek reversal. Imagine that we fall about how many pips on Thursday? About 221. So there was equal opportunity for about 400 pips throughout the whole week if you sold it off from the very top of the midweek reversal. Coming to the understanding that this right up here was the order block that we were looking for. In order for that to qualify as our next potential trade setup. And the reason why is because of the first, bearish candle, the first impulse bearish candle for this uptick was going to be the order block, but we went ahead and just kind of forced ourselves out of this little range right here, impulse just strongly away from the zone, giving us the inclination that this may be a supply zone. So if we came back up and we retested and we shorted off of the supply zone, would it be I don't know, would it be what's the word I'm looking for? I'm looking for this word. I'm looking for the specific word. Would it be justifiable to say that it's possible to take out this high at 1.6768? I would say so. Reason why is because we haven't taken out these other three highs right here. I mean, we've taken out these lows. There's a couple of lows that we've taken out all the way back down here, right? So we talked about this last week. During this is what we were going to come to the conclusion of. So what would happen after that is that we could possibly come again from this area down here, because we could search for more order blocks, or we could search for liquidity where the orders are going to be. That's what an order block is an order that the banks have placed down here, right? Otherwise, they wouldn't have shorted so strongly away from the zone, if that makes sense. Let me grab this is an arrow, so this is what the educators were doing. They wouldn't have actually shorted this so strongly away from the zone if this wasn't an order blocker, if this wasn't, an institutional area. I mean, look at it. It's within a 20 pip range from the bottom of the wick to the top of the wick. So we go from 42 to almost pretty much 70 to 80 up at the top of this wick. Okay. So with that being said, if that's an institutional level and this is a liquidity zone and we forced our way down here, what's the next expected level for us to be clearing if we're going to take out retail traders? We're going to take out all of this, 1.6507, 1.6490, and then we're probably going to jump down here to 1.6421 in just anticipation of where all of the stops are. And if the stops are down here, then we're probably going to go ahead and take ourselves sky high from this area right down here. Okay. That's just kind of like where I'm aiming for in terms of, Euro NZD's movement. And I mean, if we look at the daily, it kind of looks like, there's a possibility of it continuing to go up like that because of the respect of this area, right? Liquidity zone, there's the gap. We always look for the gaps. What's in the gap? There's a couple of, go ahead and take a look a little bit more deeply here. There's a liquidity zone. This is where the order block is. This is the first impulse candle to the upside, indicating where we had a forced candle, and here we are again re-entering for the buy back in December of 2018. What do you know? And what do we have the, you know, the short. This is where we're teaching people to look for the order blocks, ladies and gentlemen, is in the accumulation within the trend. So we're going down to the 4 hour. Let's go back again to 2018 December. Okay, so 4 hour, blah 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 blah. Okay, for now. Okay, here we are in December again. Here's the bottom, and here's where we reached back into an order block. Go back down. Cool. So it doesn't look like we're dipping into an order block right now with this, but if you look at the daily, it just shows you a little bit more of like, okay, this was the entire move that was this is the entire accumulation zone. So what are we going to look for while we're in this accumulation zone? The entry, right? Where's the entry? 62, right? Oops, let me go back up here. Okay, so here's the bottom of the swing, here's the top of the swing. Okay, now that we know we've rejected this area, what do we continue doing? We continue looking for the entry. So it's going to be the 62%, 70.5%, or it's going to be the 79.2%. So what do? We pierced the 70.5% in the uptrend. Guess what we're going to do next? We're going to continue going up and up. How do we determine where our targets are, though? This is how we determine risk. We got to determine our targets. So now that we know that this is the area, this really fine line, the 70.5, the sweet spot, the super awesome entry spot where I like to enter all the time, we're going to go ahead and just kind of flip this around. We're going to remove it, and we're going to size it up this way. Or wait a minute, I did this wrong. How did I do this last time? The extensions are on the bottom. Oh yeah, that's right. I remember. I got to reformat it. Give me a second. There we go. Cool. Cool. Okay, so if I'm looking for a target, what are my targets going to be for this trade that I've just spotted here? Okay, we know that this right here is the entry. Say that we entered like right up here on the close and open of these two candles right here. Say that we entered right here on 1.6476, right? I'm teaching you a way to, you know, calculate your take profits, ladies and gentlemen. So we entered right here, right? Gives us a nice modest 1.272, not bad, 259 pip trade, and then another one up here at the 1.618. That's another 338, you know, pip trade. You find one pair. Let me tell you something. You find one pair that gives you that many pips in such a small amount of movement, like Euro NZD does, for example, or the GBP pairs, and you apply some of these concepts that I'm teaching you, the order blocks, the Fibonacci, using the Fibonacci retracement, you know, the 70.5% level, or the 62 and, you know, the 79.2 is your optimal trade entries. You're gonna find some very good trades. You're gonna find yourself in some very climatic, you know, trend trades. And, you know, I'm not saying that this is 100% accurate, folks, but what I am saying is that these techniques are they can be accurate. They're like 70 to 80% accurate, in my honest opinion. They're pretty, you know, straightforward. Instead of using the most just complex systems, use something that's really simple, like, you know, a measurement tool along with some candlestick patterns and, you know, order blocks. And there you go, guys. You're trading with the banks. You're trading in the banks, you know, direction, not in the retail direction. Because if you're trading in the retail direction, you know, that's what we want to refrain from doing. Okay. So again, that's where our original entry was. It's way back here, but it's been here before, right? Since it's been here before, let's go back to our main, you know, plot right here. Okay. So is it possible that we can revisit these areas? Yes, very much so. It is very much so possible that we can re-enter into the 1.6437, and that would be these lows right down here, right? Have we taken those lows out? No, not yet. Is it possible? Possibly, you know. And you have to take a lot of this stuff into consideration. You can't just say that, Well, because this level was respected, that it's not going to come and revisit that level. That's absolute hogwash, guys. These levels, this is where the banks are expecting you to be. Okay, they're expecting you to be stopped out in these areas. They're not expecting you to have the entries there. That's where their entries are. Okay, so with that being said, I mean, let's look at it this way. You just saw one aspect of buying from the 70.5%, but what about the selling part? Okay, again, 79.2% and 70.5 to 62%. Okay, they were both, I mean, like, look, you found some entries in the, bigger time frame aspect, the 4-hour aspect, and it's kind of funny where my arrow ends up being after a long period of time. This hasn't even happened yet, folks, but I mean, this is just from speculation, okay? But look at this right here. As we enter into this little area, the 1.6743, it's kind of funny how I plotted this out here. Yeah, it's a 79.2%, and it's in between our optimal trade entry areas. Let's go ahead and tag that really quick, okay? So that way everybody knows that we can enter in these areas. Optimal trade entries, okay? So I'm going to go ahead and just draw like I will draw an arrow. Do it like this, just like this. Cool. Kind of have like a little, I want to put like a barrier around it, but it's not necessary. What I'm saying is that between this area and this area right here, you can enter in these areas, okay? 1 second, let me remark that right there. Cool, cool. It's really, it's really profound finding these areas, because look at the accumulation in here too. If you take into consideration that this could have been an order block way beforehand, way back when, like, it wasn't even 2 weeks ago when we saw this. Well, actually, it was kind of a month. It was a month ago, but there's this impulse move to the upside. Remember that we're coming back down in here. Let me go ahead and shed some more light into the subject. So, very clear and defined swing to this low down here. Okay. Where did we just enter into? The 62% is our optimal trade entry, right? Okay. So if this entire swing right here, if this is where we entered at the 62%, and we used a 30 pip stop loss, what kind of target could we expect from just this impulse move right here that showed us a defined lower low of a defined trend to the downside? Let's go ahead and measure that. So we're going to measure it from this high, or from this low right here to this high, where our entry was horrible English. Okay, so let me go ahead and scroll the screen down just a little bit. That was a little bit too much. Okay, so from the entry, we had a 30 pip stop loss, and we were way down here to where these lows were. Again, another 400 pips that could have been rewarded to you from that system. So notice how these lows right here are in direct correlation with the 1.618 extension. Now, I'm not a total complete believer in, one tool, it's kind of like one tool fits all, kind of like the one size fits all regimen with everybody when it comes to, like, my marriage ring is not going to fit, one size. It's not going to fit one person's finger, okay? My size 11 is not going to fit someone's size 9, okay? But our trading plans are the catalyst to the one size fits all scenario, okay? Trading is the one size fits all scenario, but the trading plan is what is fitting our technique in making money in the market, okay? So I want you to use that analogy. I mean, like, it can go both ways, it can cut both ways. So it's kind of funny how precise it can be, is what I'm saying. How precise we can be with Fibonacci ratios, how precise we can be when we find these swings in symmetry in the market. It's just perfect symmetry when we understand when we're in a trend, in a retail trend or a bank's trend, okay? And we become so much more accurate over time. I wish if I would just, like, get in the habit of locking my tools on my chart. If we just got into the habit of just, really trying to identify these areas where it's most important. And this is something that I've been preaching for now a year of coaching, guys, is we're finding these areas that are the most pertinent to our trading, that are going to give us the most reward, that are going to show us the most highest probability, setups that are going to, give us more value per pip. Okay. So with Euro NZD out of the way, do we have any questions so far on the concepts that have been explained? Anybody at all? What's up in the chat? What's up in the chat? Show me some questions. If anybody has any questions, let me know. Sheesh. I think that'll give you some better, definitely some better volume. Still very new, trying to keep up. Okay, gotcha. Not a big deal. If you guys, if anybody, is anybody here not in IML right now? Leslie, if you're in IML, are you in IML right now? Because if you are, what I'm going to recommend, okay, awesome. What I'm going to recommend to you is go through the IML Academy first and start taking some notes. Start going on Mike's session. Oh, you just finished the Academy. Awesome. Cool. So here's the thing. If you've just finished the Academy and you have a pretty decent background and knowledge in what you've been learning, this is going to be a lot different than what you're going to see in the Academy and on IML TV. Eventually it will be on IML TV. But right now we're in the works of, just getting everything tested out for, swipe trades and in the background. And we're also still working on some more background stuff as well before any of that starts happening. But what I want you to do is start tuning into Jordan and Zach's streams. They're going to be at 11 o'clock. I'll go ahead and type that in here actually. And right after this, shortly after this, you guys can tune into Mike Navarrete, his stream at 3, because he's going to be doing a market outlook as well. Okay. Anyways, let me go ahead and just type all this stuff up here so you guys have an agenda to go based off of. It's going to help a lot in your trading journey. Okay. So 11 a.m. is going to be Zachary Hogan and Jordan Morgan. Oops. IML TV stream. Oops. Okay. And 3 p.m. will be what else? That will be Mike Navarrete. And I think I spelled his name wrong actually. He's gonna have to correct me later. Go to his market outlook too. That'll help a lot, I think. Okay, and then of course mine, my specialized. This is a specialized webinar, so. Okay. Very, very special. Okay. Take a look at the IML TV schedule. But this is a schedule that you guys can go based off of right here. This is the 2 p.m. This is all Central Standard Time, by the way. Let me go ahead and just readjust that for you. Central Standard Time. Cool. So now that you know that everything's Central Standard Time, that'll help you get a basis on who you should be watching on IML TV. Okay. Awesome. All right. So what we went over, guys, is today, please go through YouTube. I do put everything on YouTube. Everything's being recorded. I've become the habit of putting my recordings on YouTube so you guys can, understand the concepts, go back through the concepts, take notes on them. And then you guys can feel free to ask questions on any of these
any of these, you just go through the comments, ask some questions, and I'll answer through the comments too. Okay. Make sure to bring some friends with you. Bring your team, bring your friends, bring your customers, bring whoever you want onto these webinars. They're free right now. Of course, they're going to be free for as long as I live, up until the point that we probably even get them into like the Pip Talk forum. But yes, my name's the Ozark Trader, in case you guys don't know. Bred and born from Missouri, of course, so that's where I get the name Ozark. All right, guys, so we went over breaker blocks, we went over order blocks and how to properly enter into these areas. Okay, so we just went over one pair, Euro NZD. All you have to do is go through different pairs that you seem fit to your personality, and we'll go over some psychological factors later on in the week. I'm going to go ahead and actually post up a curriculum on the YouTube and also keep you guys up to date in Telegram and Discord so we can continue this series. All right, guys. Much love to you guys, and I hope you guys have a great trading week. For right now, we're going to go ahead and peace out and resume our week.